Ever seen a candlestick chart where a single candlestick was like as if it was a decisive, bold stroke? That's a Marubozu, a candlestick pattern that screams pure market momentum. It's like watching a cricket match where a single team is dominating the entire match right from the first ball to the last one, leaving no room behind. In this video, we are going to discuss about this specific candlestick pattern, the Marubozu. Welcome back to another episode of Stockshaala by Kotak Securities. I am Pranav VK and I am an NISM certified trader and trainer, and I am here to make the stock markets as simple as possible for you to learn. The term Marubozu comes from a Japanese word meaning bald or shaved head. But why so? The reason being, this candlestick does not have any kind of shadow or wicks, which means the entire candle is just the body. Now let's get to the whiteboard so that you can actually see what this Marubozu candlestick look like and understand how we can interpret this in the actual candlestick chart. As you can see on the whiteboard, we have two Marubozus. One is a green one and the other one is a red one. Let's understand the bullish Marubozu first. The bullish Marubozu will have the opening price which is equal to the low price and the high price which will also be equivalent to the close price. And as we have understood in the previous video, it is the exact opposite for a red candle, which means the opening price is at the top and the closing price is at the bottom. And the only difference is that here the opening price is equal to the high and the closing price is equal to the low. What does this actually mean? What it really means is that when the market opened, it opened at this specific price. But during the entire day, there was no specific time when the price went below that price. It always went towards the top and finally even closed at the highest price, which means there was pure dominance by the bulls. It is something like when you're looking at a batsman coming into the crease and hitting a sixer every single ball. Now similarly, let's understand the bearish Marubozu. In a bearish Marubozu, the opening price is equal to the high price, which means at the start of the day, the opening price, whatever the price was, it never went above that price at any given point of time. It always went below it to an extent that towards the end of the day, it closed at its lowest price, which shows that sellers were purely dominating the market completely. It is analogous to a bowler coming in and taking a wicket every single ball, and in the next 6 balls he took 6 wickets. Another simplest way of remembering the Marubozu, do you remember Usain Bolt? The moment the whistle is heard, he is never looking back. And that's exactly how you understand a bullish Marubozu. Once bulls have taken control, they are never looking back and they make sure that they are ending at the highest price of that day. Similarly, to remember a bearish Marubozu, I would like to take you back to a very nice memory of Zindagi Na Milegi Dobara, where Hrithik Roshan takes his friends on a skydive. Once his friends dived from the plane, there was no looking back. Similarly, in the markets, when sellers take control, and that is when they are going to make sure that the price is going to end at the lowest price of the day. And that's how a bearish Marubozu is formed. Let's go to a live chart and see a real life example of a bullish Marubozu. Here in the charts, I'm showing you Reliance Industries on a 1-day time frame. On the 22nd of November, there is a formation of a bullish Marubozu. Now you might ask me, Pranav, I see some shadows at the top and bottom of this candlestick. The reason being, whatever I explained so far was an ideal Marubozu, but in real life, there is always going to be that small shadow at the top or bottom. But if you can see, the difference or the size of the body is very large compared to the very small shadow that is there. So whenever you see such kind of a candlestick at the bottom of a trend, you can see that that is a possible chance of a price reversal. So here you can see that there was a negative trend in Reliance Industries, after which you can see a bullish Marubozu, after which eventually the price has started moving up in the short term. Similarly, now I'm going to show you a bearish Marubozu in the real life charts. Again, I've taken the chart of Reliance Industries, and on 25th of March, you can see that there is a bearish Marubozu, which means there is a big body but a very small shadow. In fact, even 26th of March also is a bearish Marubozu. Now, on the 25th of March, you can see that the opening price was at the top and there is no price that has gone above that, and completely throughout the day the price has fallen and finally closed at 1285. Whenever a bearish Marubozu appears at the top of a trend, it is a possible sign of reversal that an uptrend is going to shift into a downtrend. And that's how you identify a Marubozu pattern in the candlestick charts. And now, time to put our learnings into practice. I want you to share a screenshot of a candlestick chart where you found a bullish Marubozu or a bearish Marubozu in the comments below. If you found this video useful, then I want you to share it with your friends and also subscribe to our channel. I am Pranav VK and this is Stockshaala by Kotak Securities.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.